Good evening. Good evening, ladies and gentlemen. I hope you are able to see Bimal sir and myself. If yes, just give us a thumbs up so that both of us will be aware that we are visible. Yes, all right. Yeah, I'm able to see the thumbs up. So again, we are back with yet another webinar, and on the particular topic of GST with none other than the renowned chartered accountant Bimal Jain sir. And the man needs no introduction, but again, it is. I always feel so much pleasure in introducing him. I just feel that having such a person of such eminent personality in front of you, you learn a lot always. Even when you're introducing him, you believe that okay, a person like single person, how can he achieve so much of things? And that gives me and others and a lot of inspiration. So without further ado, I would like to just give a short introduction for sir. And as we all know, he has been a member of ICAI since 1994 and has an exceptional reputation for his expertise in tax laws, compliance, financial strategies, etc. With an illustrious career spanning over 21 years, he has been a driving force in shaping and influencing India's taxation landscape altogether. And his vast knowledge and profound insights into the ever evolving tax regulations have made him a sought after authority always. And this is just the starting. He has a bachelor's degree in law, a practicing lawyer as well, and a qualified SAP financial control consultant. On top of that, 18 years of working experience like in various other reputed companies like LG, Honda, Hindustan. And trust me, when I first got to know that at which point and peak of his career he left all that and started in this journey of his where he started practicing, it's just a sight to behold. I will not give out the number of salary that he was making, but it was huge at that time. If I am there, I will never leave it. But hats off to him for that. And sir is not any reputed person in India. I don't know how many of you are knowing it, but he has represented India in a country like Japan, where he has a world record for it, where so many attendees took part in his uh, association at that particular day. So, without further ado, I would like Bimal sir to take over this stage and impart his knowledge that he already has. And before that, sir, one question as I always ask. So, when you were growing up, right? What what was that passion that made you believe in yourself, or what was that confidence that made you believe in yourself that okay, at this stage of my career, even though I am doing so well, what was that call that made you push and take that gamble or risk? So dice is all yours, sir.
Thank you, Hers, for a lovely introduction today. But to start with, dream is what really important in anyone's life. You must dream. You must dream for higher and higher goal and achievement.
Correct.
Once you start believing in yourself that yes, I can do it, rest assured God is with all of us together, and it will fall back. We have to put sincere efforts, dedication, commitment, and God will look after us. So when you talk about passion comes only when you start thinking where you wanted to go about. What is your dream? And when dream is there and that is being supported with the execution, rest assured, God look after us. And if you do good, then good will come back to you. This is my mantra for taking it forward. I compliment all the participants who are taking out time and joining this webinar, and on very important topic for the closure of financial year 23-24 from GST compliances perspective. So very interestingly, this webinar is of different perspective, but lot of activities which we can plan now and can do when we are filing our GST return, which is year ending March 24. So with this, if we all are okay, we are ready. Shall I start? So maybe you can put your comments in question answers tab here on this platform. So anything which you want to ask, question answers tab is there. You can put there, but definitely as I progresses, you will get the answer of your query. I am going to highlight number of things from a perspective of outward supply, inward, which is input tax credit, reverse charge mechanism, and certain thing which is related with the tax audit and GST compliances as well. And then certain activities which we must do by 31st March 2024. So if we all are ready, without taking any time, let me start with. So as usual, you must keep a paper and pen with you, which is important. And then you can note down whatever we are discussing today. I will go slow so that you can digest my deliberation and record the same on a piece of paper for your future reference. So today's topic I've divided into outward supply, reverse charge method, input tax credit, which is inward purchase, and then a provision which is applicable from GST perspective, but you would be needing those details when you are going to file your form number 3CD from tax audit perspective. And last, certain activities which is important to be executed by 31st March 2024. Let me start with the outward supply of goods or services. As we know that in GST today, we have got books of accounts, our own books of accounts, which we get it audited. And with books of accounts, what we are doing for GST return, GSTR1, which is my outward supply statement, and GSTR3B, where we are consolidating our outward supply, inward, then adjustment, then payment of taxes. So 1, 3B, and then followed by 9 and 9C, relevant for the financial year 23-24. So what we have to pick up, we have to pick up our books of account, GSTR1 and GSTR3B. March is the important month for which we need to take care. So we have to do reconciliation part. We have to thoroughly do the reconciliation part. And here I would like to highlight one thing which you must make a note of it. That whatever outward supply pertaining to 23-24, we are showing in 1 and discharging the tax through 3B, we can do adjustment also, which may be incremental or which may be decremental, means increasing the liability or decreasing the liability. In a period April to October 24, I'm saying October 24, please keep it to your mind. So maybe certain transaction which is going to be related with the financial year 23-24, but for that, any adjustment entry is being passed in a period April to October 24, we have to capture because that is related with the 23-24. You must be recalling in GSTR 9, the specific table wherein you're capturing your 23-24 data shown in 23-24. So table 4 and table 5 alongside table 9 of GSTR 9. And wherever you are doing any adjustment pertaining to your outward supply related to 23-24, but shown in a period April to October 24, table 10, incremental liability, table 11, when you're decreasing the liability, and table 14, where net of liability is being paid of GSTR 9. That is how we have to capture all the data. Here I'm saying October 24. Why October 24 is important, we need to understand. See, we know that effective from 1st October 2022, there is certain changes in different section, wherein they have said 30th November is the sacrosanct date. You must be recalling section 16, subsection 4, time limit to avail credit. It is earliest of due date, 30th November, or date of furnishing annual return, whichever is earlier. Go to section 34 where credit note and debit note reference is there. Again, the time period prescribed is 30th November or due date of furnishing annual return. Go back to section 37, wherein if you're undertaking any rectification of any omission or error in GSTR1, you can do by 30th November. Am I right? 30th November. If you go to section 39, which is GSTR 3B, so any rectification of any omission or error, you can do till 30th November. Everywhere reference of 30th November. But why I'm saying October 24? It is very, very important. I will explain this aspect to you. So when I'm saying 30th November, you should not go back to November return, GST return, November 24 return. No. I'm talking about when you talk about outward supply, GSTR1, then the last month, which is important month for you, would be October 24, which is important for capturing all adjustment entry pertaining to 23-24 is being shown in a period April to October 24. So October 24 return, GSTR1, outward supply, and even 3B for availing credit. Though section 16, subsection 4, talking about time limit is 30th November, but relevancy would be that your supplier must file their GSTR1 by due date. So October 24 GSTR1 must be filed by due date so as getting auto-populated in GSTR2B. And that auto-population comes back on 14th of November 24. That is what I'm referring here, that October 24 is the last cutoff date for filing one or auto matching of ITC from GSTR2B, which is captured in GSTR3B for availing credit. So this is what you have to keep to your mind. Let me now start this compliance, which is important from financial year 23-24 perspective. Hope we all are ready. Shall I start? If you all are ready, you can say thumbs up to me. I will start immediately. Thumbs up, then we will start one by one. So you have to answer also in question answers tab. Wherever you feel like, you can always answer in question answers tab. Now, advance against supply of goods or supply of services pertaining to financial year 23-24. My question to all of you, and you have to quickly answer, right, in question answers tab. Whether advance taken for supply of goods chargeable to GST, say yes or no. Yes or no in question answers tab, so that it is having clarity from all of you. Advance against supply of goods not chargeable to GST. From which date? 15th November 2017, not chargeable. Advance against supply of services chargeable to GST. Please tell me yes or no in that question answers tab. Applicable or not applicable, which is against supply of services? Answer is yes, against supply of services, applicable. So you have to cross check if any advance received against supply of services, then GST leviable. Having said that, second part is goods or services. So we have seen even in GST, we are having a doubt sometime where a particular transaction can be classified as a supply of goods or supply of services. We are having doubt. In that regard, my answer to all of you would be go back to Schedule 2. Schedule 2, which is determining a transaction can either be supply of goods or supply of services. but still a lot of confusion. And whenever you are having confusion, you have to properly determine and rate you're aware of 5%, 12%, 18%, 28%. And what kind of classification dispute persists today in the market? That maybe department wanted to classify under a rate 18%, whereas you believe it is 5% leviable. Department want to levy 18%, but you as a taxpayer believe your product is falling under 5% rate. Then I'm giving you certain, broad parameter. Please keep it to your mind. First, you should check Schedule 2 for determining the classification, a supply of goods or supply of services. Second, there's a compulsory quoting of HSN code for goods, SSE code for services, effective from 1st April 2021. If any registered person whose aggregate turnover up to 5 crore in preceding financial year, he must furnish compulsorily 4-digit HSN code or SSE code for all B2B supply. All B2B supply. And B2C it is optional. Where registered person aggregate turnover is more than 5 crore in any preceding financial year, then compulsorily quoting of 6-digit HSN code or SSE code on tax invoices on both B2B and B2C supply. So you should go back in your invoices raised whether you are compulsorily quoting or not quoting. Because this HSN code and SSE code will help you to determine the correct classification and rate. Here also I'm giving you another hint. On GSTN portal, there's a facilitation activity. You can go back and cross-check by putting that HSN code or SSE code. Whether your product, what is the correct HSN code or correct SSE code. This facility is available on GSTN common portal. But for litigation perspective, explanation Roman 3 and Roman 4 for classification of goods. In goods rate notification 1/2017, clearly saying in case of any doubt, you can always look at subheading, heading, tariff, explanation, section note, chapter note of first schedule of Custom Tariff Act in case of any doubt in terms of what would be the HSN code. So that explanation Roman 3 and Roman 4 under GST goods rate notification 1/2017 going to be additionally helping you out from first schedule of Custom Tariff Act. But this is important for all of us. Now my submission. Wherever you are dealing with the B2B supply, B2B, registered supplier to registered recipient, to avoid unwanted litigation, my advice would be, we can always let's say department saying 18%. And B2B supply, your buyer will get the credit. And thereby it is going back in the hands of customer. So if you do not want to invite any litigation, being conservative, to buy peace of mind, we can always pick up this rate so that to avoid any unwanted litigation. But having said so does not mean that you should follow this particular path. There may be B2C supply wherein rate is going to impact you and you are firm that only 5% leviable, then you can take your conscious call. But these are the factors which you need to work on to determine the classification part. Hope this is clear to all of you. Can I see hands up like thumbs up so that we can go ahead, or you can write yes in a question answers tab also. All right, perfect. Next part, e-invoicing generation. Being supplier, you need to raise tax invoice, right? But do you know that you need to compulsorily generate e-invoice? Then what is the provision applicable? Provision for UH. If your aggregate turnover is more than 5 crore in any preceding financial year, starting from 17-18, and this threshold got reduced effective from 1st August 23. Aggregate turnover more than 5 crore in any preceding financial year starting from 17-18, then you need to compulsorily generate e-invoice. INB 01, which need to be routed through IRP, invoice registration portal, having unique IRN number, digitally signed with QR code. So you have to cross-check whether this provision is applicable to you or not. So there may be a case that it is applicable to you. You didn't generate the e-invoice. At least 30 days window is open today, that you have raised initially tax invoice, but you were supposed to generate e-invoice. Then 30 days time lag window is open. You can pass on all these, e-invoicing details, particulars on IRP, invoice registration portal. So 30 days window is being given to you. And this is important from other perspective. Buyer, recipient, is purchasing goods or services from you, and you're supposed to generate e-invoice, which you're not generating. You're only raising tax invoice. Then your buyer will not get that credit on that tax invoice. For your buyer, he need to have e-invoice with unique IRN number, Rule 48, Sub-Rule 4, making it compulsorily for your buyer, recipient, that such supplier who are supposed to generate e-invoice, having this threshold of 5 crore, which I said just a while ago, then your supplier must generate. Otherwise, your buyer will not get the credit. So check the compliances pertaining to e-invoicing. Hope I'm clear. Can I see once again thumbs up this part? That 23, 24, but in between 1st August 23, these changes are being made. Coming back to now, your reconciliation. Reconciliation of your invoice versus eBay bill generated. You need to, take out all data whereby you are generating your eBay bill. eBay bill generation required on movement of goods. It may be supply, it may not be supply. When it is supply, then taxable invoice. And when it is not supply, on delivery challan. But movement of goods above threshold amount, which is on an average 50,000, normally 50,000, unless otherwise different figures are being specified statewide. Compulsorily generation of eBay bill. You need to do reconciliation. Proper reconciliation should be ready so that you would be knowing that I have generated this many eBay bill. Against that, these many invoices are being generated. Against that, these many delivery challans are being generated, and certain eBay bill we generated but got cancelled or not used. So you have to find out region and reconciliation. You should be ready with that, because tomorrow when any audit is coming up, you should be ready and substantiating your information, details and document to the GST authority. So it is important not only for audit purpose, it may be for scrutiny of return, section 61. It may be important for section 65 audit. It may be important for Section 66, special audit by chartered accountant or cost accountant. It may be important for Section 67, inspection, search and seizure. And it is also equally important for your reply to so-called notice under Section 73, non-fraud, Section 74, fraud cases. Hope this reconciliation, again, you will take care of the same. So these are the compliances you must do at the year end. So this is e-Bimal part I narrated. Now coming back to some related party transaction. Normally when we are supplying goods or services, we are raising tax invoice, no problem. We have faced the challenge whenever we talk about related party transaction or distinct person transaction. What is distinct person transaction? I'm having 4 registration, same PAN number, then we are distinct person, right? And then the concept called cross charge. Cross charge. There are lot many videos available on cross charge on my YouTube channel, which you can watch. But here you have to take care that cross charge when there is element of service. And how it is possible? Head office, let's say in Delhi, registered, and your CEO, CFO, common HR, IT accounts team sitting at Delhi, and also they're looking after the operation of other 3 registered units in 3 different states. Whether there is cross charge? Answer is yes, and that is being confirmed by different advanced ruling. Cummins India Limited, Columbia Asia Hospital, cross charge entry to Schedule 1, quite known to all of us. And there is another concept called ISD, Input Service Distributor. Input Service Distributor is applicable only when you're procuring input services, common input services from third party and paying GST. And these are meant for other distinct person as well. Then this credit where you're procuring common input services need to be distributed. In past, we have seen even we have not taken ISD registration. We may have followed the cross-charge mechanism. There is circular number 199 dated 17 July 2023. Then 52nd GST Council meeting. Then this Finance Bill 24. Now they are saying you need to take compulsorily ISD registration for third-party common input services. You can't follow the cross-charge. Wherever ISD for distribution of credit, separate registration. And cross-charge when there is element of service. So you have to go back and check your compliances pertaining to cross-charge versus ISD perspective. In cross-charge, one more point to you. In cross-charge, we have seen what would be the valuation, Rule 28. And Rule 28, second proviso plays important role. Now here, listen very carefully. This circular number 199 dated 17 July 23, which I referred, is very interesting and clarifying a position. Irrespective of fact whether recipient is entitled for ITC or not, irrespective of fact, whether it is taxable sector or exempted sector, at least salary to CEO, CFO, common HR, IT accounts team need not be included in valuation for chargeability of GST. Salary need to be excluded, irrespective of fact whether taxable sector or exempted sector. Where recipient is entitled for full ITC, second provision of Rule 28 is helping us a lot. And that is being clarified in this circular number 199. They are saying if recipient entitled for full ITC, then supplier can pick up any value, and that shall be deemed as an open market value, and department should not dispute. So you just check your compliances pertaining to cross-charge versus ISD. Coming back to personal guarantee versus corporate guarantee. Personal guarantee given by the director, no GST leviable, clarified. But corporate guarantee, there's a change. They're saying it is transaction between related person. Entry 2, Schedule 1, chargeable to GST. And it got clarified very recently. And there's a change in Rule 28, Sub-Rule 2 got inserted. And they're saying for valuation, it would be 1% of corporate guarantee amount or actual amount paid, whichever is higher. This change made effective from 26th October 23. 26th October 23. So they are saying that this would be the valuation. Then a lot of litigation going on, right? What happened prior to 26th October 23? My take. Of course, this subject matter has gone for litigation. Notice is being issued to the revenue recently in Delhi High Court with a corporate guarantee chargeable to GST. This is the litigation point. But for compliance's perspective, my take is prior to 26th October 23, I can pick up any value and that would be deemed open market value provided recipient is entitled for full ITC. Prior to 26th October 23. Post 26th October 23, specific valuation mechanism, sub-rule 2 got inserted in Rule 28, need to be followed. Litigation, of course, writ is being filed, and now this matter will be reaching to the higher different court, and then quite obvious to the Honorable Supreme Court. So it will take a longer time period. So you need to plan as per your business exigencies. So this is on corporate guarantee. Coming back to job work. When I'm talking about outward supply, you sometimes send input and capital goods to a job worker under Section 143 of CGST Act. You need to cross-check that these input must come back to you within a period of 1 year for input, 3 years for capital goods, 3 years for capital good, with extended time period, 1 year for input and 2 years for capital goods. Cross-check whether this time period is expiring in 23-24, whether you are getting these material back within time. If not, then there would be deemed supply concept. You need to be careful about. So go back and cross-check. And for your compliances of ITC 04 return, and for return, the provision, you know that if any registered person whose aggregate turnover up to 5 crore, annual ITC 04 by 25th of April. If your aggregate turnover more than 5 crore, 2 half-yearly ITC 04. April to September by 25th October, October to March by 25th April. So you need to do compliances from job work perspective as well. Section 143. Coming back, goods sent on approval. So you may have sent on delivery challan. What happened? How long? Either it should be returned back within 6 months time period, or you should raise the invoice as a taxable supply. So goods sent on approval can't be left open-ended. It needs to be closed either by raising tax invoice or maybe returned within a maximum period of 6 months time period. Otherwise, deemed supply. So you need to be careful about this particular transaction. So these are the transactions I summarized from outward supply perspective. So I'm just pausing for 30 seconds and want to see from each one of you. Outward supply lot meaning compliances I've explained. Hope you all are clear. Can I see thumbs up or yes in question answers tab? Thumbs up or yes in question answers tab? All right. All right. Thank you very much. Okay. Come back to now reverse charge method. Reverse charge method. Second category, second bucket. reverse charge method, now you as a recipient liable to pay GST. There are two important sections, section 9 subsection 3, read with section 5 subsection 3. 9 subsection 3 CGST Act, section 5 subsection 3 IGST Act. You as a recipient need to pay GST under reverse charge method for specified goods falling in the notification number 4/2017 Central 4/2017 for IGST for goods. For services, 13/2017 for CGST and 10/2017 for IGST for specified goods and services. You as a recipient need to pay GST irrespective of fact whether your supplier is registered or unregistered. Bear in your mind, you as a recipient will discharge GST under reverse charge for specified goods and specified services. Section 9 subsection 3 read with section 5 subsection 3 of IGST Act. Another section, section 9 subsection 4. It is specifically applicable for real estate developer. If he is procuring specified goods or services from unregistered supplier, effective from 1st April 2019. So 9 subsection 4 is not generally applicable to all of us. It is only for real estate developer when he is procuring specified goods or services from unregistered supplier. Having said that, now look at the compliances. You go back, check your purchase site, expense site of PL account. Why you need to check? Because reverse charge liability is yours. Because if you don't pay as per time of supply provision, then you end up paying the same with interest. Reverse charge need to be paid through e-cash ledger, not through e-credit ledger, e-cash ledger. And if you don't pay on time, then interest is leviable at the rate of 18% and that to be paid through e-cash ledger. So what is the time of supply? For goods, reverse charge, section 12, subsection 3. Earliest of the three. Date of receipt of goods, date of payment by the recipient, date following the end of 30 days from date of invoice issued by the supplier. Earliest of three. That is your point of taxation. So you need to pay GST as per time of supply provision. So maybe you have booked the purchase, maybe you have booked the expenses, but you have not discharged GST and the reverse charge for which you are liable. So this time of supply important even for services. Section 13, subsection 3 of CGST Act. What is time of supply? Date of payment or date following the end of 60 days. The date of invoice, whichever is earlier. So your POT may have arisen, but you have not discharged the GST and the reverse charge. You are liable to pay interest at the rate of 18%. Go back and cross-check. Another question which I normally get from the trade parlance, which I'm sharing here, sir, what happened? It was my reverse charge liability of 18, 19, 19, 20. I pay now. We get this question, right? A lot of question comes back to us. 19, 19, 20, 20, 21, my answer to all of you. If you have procured the specified goods as per that notification 4/2017 or services 13/2017 Central, 10/2017 Integrated IGST. And you need to discharge GST under reverse charge, which you have procured from registered supplier. registered supplier, then you will not get credit for the past period, 1819, 1920, because their invoice would be the eligible document which they have raised in 1819, 1920. You may be paying now along with interest, but time limit, section 16, subsection 4, gone. You can't avail credit. But wherever you have procured from unregistered supplier, listen carefully. Unregistered supplier, specified goods or specified services subject to RCM, then you can avail credit. 1718 RCM now, yes. 1819 RCM now, yes. You can avail credit. Of course, interest is leviable, but credit is available. How come? Because whenever you're procuring from unregistered suppliers specified goods or services subject to RCM, then as per section 31, subsection 3, clause F, you as a recipient need to raise self-invoice. Self-invoice, 31, subsection 3, clause F of CGST Act. And this self-invoice is your eligible document. Raise now. Raise today's dated. For the past financial years, today's dated. And pay GST under reverse charge, of course, along with interest. RCM will go through eCash ledger and interest will also go through eCash ledger. But credit is available because this self-invoice is the eligible document as per Rule 36, Sub-Rule 1, Clause B of CGST rules. And it clearly says this is your eligible document, subject of payment of GST and the reverse charge. Hope I'm clear to all of you. Hope I'm clear to all of you. Another question which I get from the trade, sir, if I'm paying RCM in same month, can I avail the credit in same month? Sometimes we get this question, I'm paying RCM in same month. Can I avail in same month? My answer, of course, in same month. Go back to GSTR 3B. You have to capture your RCM liability in table 3.1D. B, table 3.1D for payment, RCM liability. And where you avail the credit, table 4A, 1 is for import of goods, 2 for import of services, and 3 for all other inward supply subject to RCM, which is not covered in 1 and 2. In same month, you can avail credit. So table 3.1D, liability to be paid in cash, and table 4A2 or 4A3, availing the credit. This is pertaining to reverse charge liability. If you have missed some of the component of my deliberation today, do not worry. You will get this webinar through YouTube. So this would be available to you. But you may try to note down whatever I'm discussing now, so that tomorrow when you're watching this webinar, you can connect those points. So this would be available. This is pertaining to reverse charge. Am I clear to all? Can I see thumbs up once again from all of you? Thumbs up once again. So that I'm happy that you're getting it and you're getting many inputs for your compliances perspective. Yes, please. Many thumbs up. Thank you very much. Thank you. Well done. Well done. Okay. So many. So recently Anjali has posted a query 16.4. I've explained Anjali to you. And through Anjali, I've replied to so many. Now, pertaining to input tax credit, bucket 3, third bucket, your inward supply, purchase, important one, input tax credit. First, take your books of accounts where you are booking credit in your e-credit ledger. Pick up your 2A, 2B, and pick up your 3B, where you are showing availment of credit in 3B. And then keep to your mind that you need to fill up 9 and 9C for 23, 24. Before I move, let me first touch base. Important one. Here I need your attention so that you can really get the reference very carefully. First, you have to keep 5 conditions in your mind for availing credit. What are those 5 conditions? You as a buyer, recipient, should have tax invoice. You must have received goods or services. Your supplier must have paid taxes. Fourth, you as a recipient regularly filing return under section 39, which is GSTR 3B, recipient. And fifth, the credit which you have availed in your 3B must be matched with GSTR 2B. GSTR 2B. So 2B is now sacrosanct. So what happened? Year end, you can sit down with your e-credit ledger in your books of accounts. You can see how much credit you have availed in 3B and cross-check with the 2B. How much credit is auto-populated in 2B. How it is getting auto-populated? Because of your supplier furnishing outward supply details, which is inward for you in a GST fund. Now listen carefully. I said I want you should listen it carefully. It is twofold. Let's say credit is not auto-populated in 2B. Can you avail credit? You're having tax invoice. You have received goods or services. Your supplier has paid taxes through 3B. And you are regularly filing GST return, 3B. But it is not matching with your GSTR 2B. And this 2B provision made applicable from 1st January 2022. Can you avail credit? In my humble opinion, you can't avail. And why it is not matching? Reason could be, reason number 1. It was B2B supply, but your supplier has made mistake filing one shown as a B2C. It is not going to be auto-populated. Instead of putting your GST number, he has put GST number of some other party. It was interstate supply, Delhi to Tamil Nadu, but he has shown intrastate, showing but ineligible. He may have paid taxes to 3B, but did not file GSTR 1. So what happened? It is not getting auto-populated. So it is not matching with GSTR 2B. And maybe a case, credit coming in 2B, your supplier registration got cancelled for either a region. Or supplier registration got suspended. Or it is coming to your knowledge that your supplier has not paid the taxes. Time. Sit down with your books of accounts, with all purchase invoices, e-credit ledger. Match with your 2B and then check availment in your GSTR 3B. Now, wherever it is not coming in your 2B for either or region, which I've explained just a while ago, you must go back to your supplier who has made the mistake while furnishing his GSTR 1. While furnishing his GSTR 1. Unless he undertake those corrections, and these corrections are permissible, rectification of any omission or error in outward supply particulars by supplier can be undertaken till October 24. So any mistake of 23, 24 can be corrected by your supplier till October 24 GSTR 1. Why I'm saying October 24? Listen carefully. Time limit to avail credit is 30th November, right? 30th November 24 for financial year 23-24. Or due date of furnishing annual return, which is 31st December 24. So 30th November is the last date. But why Bimalji is saying October 24? You would be filing your 3B of October by 20th November. Am I right? 20th November. Time limit saying 30th November. But why Bimalji is saying October 24? Listen, listen, listen. Your supplier, let's say I'm your supplier. I'm supplying to you. I'm filing one, right? I made mistake. It is not auto-populated in your 2B. You will come back to me. I need to undertake all rectification till October 24 GSTR1. Why? Because when I will undertake these rectification till October 24 GSTR1, which is filed by 11th of November for monthly filer, 11th of November. And those who are under QRMP through invoice furnishing facility till 13th November for the month of October, which is auto-populated for you on 14th November. 14th November. And it must be auto-populated in your 2B. Fifth condition. Unless it is getting auto-populated in 2B, credit is not available. So sacrosanct is not 30th November, not 20th November. It's your supplier filing his October 24 return with all correction by due date 11th November, so as getting auto-populated on 14th November for you. Coming in your 2B, then there will not be any dispute pertaining to not matching with 2B. So this is what I'm referring again and again, October 24. Now what I'm saying here, that the 23-24 transaction can be undertaken for any correction, till October 24. And that is what. And when you go to 9, you must be recalling that 23-24 credits shown in 23-24 table 6, table 7, table 8, table 12, where you are reversing credit of 23-24 in a period of April to October 24. Table 13, credit of 23-24 you are availing in a period of April to October 24 of GSTR 9. So that is how you need to capture the data, and compliances need to be undertaken. Please tell me, am I clear to all? Can I see thumbs up from all of you? Yes, sir, it is clear. Can you say thumbs up to me? Or yes in a question answers tab? Can you say yes in a question answers tab? Quickly, so that you know, clarity for me. Okay. All right. So lot of yes, lot of thumbs up. Thank you very much. Thank you. Thank you. Highly appreciated. Now listen. One concept is credit note in GST. And of course, time period for issuance of credit note under GST is 30th November. But keep in your mind October 24. So your supplier who has supplied to you, and for a region that taxable value is higher or tax rate is higher or deficiency in goods or services or return of goods, which are the region for issuance of credit note under section 34. Now, what I wanted to draw your attention, if your supplier issuing credit note pertaining to 23-24 in a period 23-24, then captured in 23-24. If your supplier issuing credit note in a period April 24 onwards, but till October 24 related to 23-24. Then the picture, table 10, incremental liability, debit note, table 11, decreasing the liability, credit note, adjustment need to be captured, and corresponding tax net off in table 14 of GSTR 9. You need to bear in your mind. Now here what I wanted to draw, and you need to be careful about. If debit note, which is incremental, which is not reducing the liability. Let's say I've raised the invoice for 100 rupees in 23-24 to you. Now we both of us concluded, no, it should be 120. So I'm raising debit note for additional 20 rupees in a period, let's say May 24. Dated May 24. Dated May 24. So whether it has got any relevance and need to be shown for 23-24, or it will be a transaction of 24-25 from a perspective of 16 subsection 4, limit to avail credit. Specific change from 1st January 21, that date on debit note is determining the time limit. So it is being delinked with the difference of preceding financial year. So that too you should bear in your mind. So this was on 2B part, which I've explained to you. Now coming back to the next part of ITC. You must be knowing that the July 2022, your reporting structure of input tax credit in 3B has gone a change. What change has been brought? Table 4A5 of GSTR 3B, 4A5, other credit. What we were doing in the past, let's say 100 rupees is the total credit, and 20 rupees credit is of 17 subsection 5, ineligible credit. Let's assume. Then you are entitled only for 80 rupees. What we have done in the past, we were showing net amount of 80 rupees in table 4A5 of GSTR 3B. That we were doing in the past. But from July 2022, your reporting structure in 3B has gone a change. So what is now required to be? You need to bifurcate your ineligible credit, maybe because of 17 subsection 5, maybe because rule 42 and rule 43, which is the reversal of proportionate credit on your exempted supply, 42 for input and input services, 43 for capital goods. And this is not available to you. You need to bifurcate now. Bifurcate ineligible and your eligible credit, but you're reversing for the time being because of certain condition not met, which you will reclaim in future. So credit eligible, but reverse because some of the condition not satisfied, and you will reclaim in future. So this reporting structure has got changed. So in second category, what could be the example? Let's say your supplier raising invoice on 28th March today from Delhi to Tamil Nadu. He's showing in a GSTR 1, also auto-populated for you in 2B in the month of March, but you're receiving goods in April 24. Can you avail credit in the month of March or April? You can't avail in the month of March because goods are not being received. Goods are received in April. So what happened? This credit is available to you, eligible to you, but you need to reverse and reclaim in April 24. That is how the reporting structure. So what to be done? Wherever credit is ineligible and you need to reverse. Table 4B1 of GSTR 3B. Table 4B1 of GSTR 3B. And wherever it is eligible, reversed, and you will reclaim. Table 4B2. And whenever you are claiming this credit, table 4D1 with table 4A5 of GSTR 3B, this reporting need to be disclosed now specifically. So your data need to be captured accordingly. So data bifurcation on input services, capital goods may also equally important for you. Please tell me, am I clear? This part is clear. So this is the high time you need to prepare yourself. Now net off in table 4A5, not possible. Not possible. Can I see thumbs up and yes in a question answers tab? Can I see that? Okay, so many. Okay, thank you very much. Thank you very much. Thank you. Thank you. Now here, another point. I said rule 42, rule 43. Said that, right? Reversal, pro rata, to the extent of exempted supplies, you need to undertake. But we have seen the challenges that whenever we are doing undertaking reversal in terms of rule 42 and rule 43, it may not be 100% correct, because whatever reversal is being done, provisional data. It is on the basis of provisional data. But when 31st March 24 getting concluded, it may be a situation that you may require to undertake some additional reversal. So what is the last date? For the period starting from April 23 to March 24. You have reversed, let's say 80 rupees, but you are supposed to reverse 100 rupees. So 20 differential need to be done. So what is the last date for you to reverse this credit, otherwise liable for interest? Please tell me. 31st March 24. So you need to sit down for your pro rata reversal reconciliation for rule 42 and rule 43. 42 for input and input services, 43 for capital goods, and last date would be 31st March 24. Hope you all are getting my point. Now, having said that, now next point would be coming another reversal, which is in terms of second and third proviso, section 16, subsection 2, where recipient fails to make payment, fails to pay within 180 days, then recipient need to reverse credit, right? So you need to go back and cross-check. If you don't reverse, then interest. Of course, for interest litigation perspective, I have got my another ground. I will say interest is leviable if I'm not reversing immediately when 180 days expired first. And second, yes, it is wrongly availed credit, but if I have not utilized, no interest leviable. These are all litigation defense point. But provision says recipient fails to pay within 180 days from the date of invoice. You need to reverse the credit, please. So you need to go back and check. You have to check from date of invoice perspective. And this data is not being captured in our return. It is your books of accounts wherein you are going to capture this. Because if you don't do, maybe this is wrongly availed credit you have utilized also. Then interest, 18% per annum. So you have to be very, very careful. And the second and third proviso of section 16, subsection 2, not applicable in case of reverse charge liability, in case of schedule 1 transaction, in case of part payment. So total invoice 10 lakh, 5 lakh is being paid, then reversal would be required only to the extent of balance amount, 5 lakh rupees. And then reference of section 15, subsection 2, clause B, where supplier is liable but incurred by the recipient. So that is a separate point, but you can watch this video on my YouTube channel as well. But this is what the reference. And wherever force majeure clause, from litigation perspective, I can always say recipient fails to make payment will not be invoked because of force majeure clause. But general provision, recipient fails to pay within 180 days, he need to reverse credit. Provision says along with interest, but interest leviable only when it is utilized. Otherwise, to my mind, no interest leviable. This is the pertaining to ITC. Now then you must reconcile your book stock versus physical stock. We have seen challenges maintaining books of accounts with physical stock. If any inquiry coming up in terms of audit, inspection, search, seizure, and your book stock is not matching with the physical stock, then department would be asking you to reverse credit. So you need to undertake even reconciliation at the year end. Credit lying in your e-credit ledger with your book stock versus physical stock. We have to be very, very careful. You need to undertake reconciliation whenever TDS and TCS provision applicable. You are a recipient. You are a recipient. And somehow your supplier is deducting TDS under section 51. You know, government department, local authority, they deduct TDS under section 51 when threshold amount is more than 2.5 lakh rupees. The TDS, when deducted, it gets credited in your e-cash ledger. So reconciliation, whatever deducted, it is coming in your e-cash ledger or not. When transaction applicable to TCS, tax collected at source, e-commerce operator, he is collecting TCS, and this TCS which is collected gets credited in your e-cash ledger. Reconciliation, matching. And whatever lying in your e-cash ledger, if you're not in a position to use, you can claim refund. E-cash ledger, I'm saying. Whatever it is getting credited in your e-cash ledger on account of TDS and TCS, if you're not in a position to utilize the same, you can go for refund of the same. E-cash. That is what reconciliation you can undertake. This was the third bucket. Coming back to the fourth bucket now. Interesting one. Income tax versus GST compliances. Now, 360-degree, I'm telling you, now it is not only GST. Now, department, Vision Age, they are capturing our data 360-degree from income tax and from GST perspective. And checking out our ITR and books of account also. We need to be very, very careful about. Those days are gone when we used to do something showing here for GST purpose and not showing for income tax purpose. Those days are gone. It need holistic, complete cross-checking and reconciliation. Your books of accounts must be seen from both perspectives, from income tax perspective and from GST perspective. For income tax, wherever tax audit is applicable, form number 3CD, clause 44 is applicable. You need to capture certain data of GST which need to be furnished your form number 3CD. I hope you're aware of, but let me reiterate and repeat for the benefit of you all. What all data? You need to capture your total expenditure, whether capital or revenue expenditure. You need to capture it. Then you need to capture expenses in relation to a supplier who are registered in GST. Expenses in relation to the supplier who are composition dealer. Those who are not raising tax invoice, only bill of supply. Then expenses in relation to those supplier who are not registered in GST and you're booking such expense. Your books of accounts, you need to capture. You need to capture such expenses pertaining to goods and services which are exempted. You need to capture the payment made to the entity who are registered in GST, and these data will show. And in a way, department can cross-check your transaction with the registered supplier versus non-registered supplier. Your major expenditure are with the registered one or unregistered one. Why this? Income tax, we do lot of hanky-fanky. Days are gone. If any such expense which is being booked from unregistered supplier need to be captured here. And you need to be careful about, subject to scrutiny, inspection, search, and seizure. It is only from compliance's perspective, but with this compliances, government is capturing the data for multiple activities which they undertake. Hope this part is also clear to all of you. Am I clear? Can I see thumbs up once again that this part is again clear to you? You need to be very much careful about. Can I see thumbs up for that? Okay. All right. Thank you. And coming back to some of the compliances which you must do. You should not forget. If you're an exporter, then must have reconciliation of your shipping bill, GSTR1, when we are talking about export of goods. If you are services exporter, reconciliation with your FIRC or bank remittance certificate, because section 2 subsection 6 of IGST Act, one of the conditions, you must receive money in convertible foreign exchange unless otherwise permitted by RBI, Reserve Bank of India. So this reconciliation is equally important. But here, another aspect, export are zero rated, supply to SEZ unit or developer are zero rated. It can be on payment of IGST or without payment of IGST. Without payment, LUT need to be executed. LUT need to be executed. Then RFD 11 need to be executed by 31st March 24 for the financial year 24-25. So this is one. Second, you should also have new tax series number, new tax invoice series number, which is specifically applicable for 24-25, which must start from 1st April 24. So you need to have, that continuity should be broken down for 23-24, and new series numbers shall be allocated for 24-25. And this is what it is being asked in CGST rule. Then you need to do, if you're a QRMP, quarterly return monthly filer, because your threshold is less than 5 crore, but you want to move to monthly, you have to opt for an option till 30th April 24. So you can move from, you can continue as a QRMP, but you'd be monthly filer. So option, that is how the provision all about. And GTA, forward charge or reverse charge option need to be executed till 31st March 24. So a lot of things which I've explained in this 1 hour, 15-minute capsule. It's from my side, it was one after another. I was not pausing myself. I do not know how you have captured, but I'm damn sure a lot of things I have deliberated in today's webinar for your compliances for financial year 23-24. Can I ask one question to my all viewers who are watching this webinar? Though I've tried my best, I captured many things. I will take your question and question answer session just after this, but I hope you have captured all the pointers for the compliances perspective. If it is yes, can I see big thumbs up from each one of you? Because 1 hour, 15 minutes, it was like IPL match, one after another. Yesterday, we have seen the highest run made by Sunrisers Hyderabad against MI. So that is how today's webinar, it was firing from all cylinders, many provision, but the fortunate part, this video would be made available to you. In case you have not captured today, don't worry about this video will come back to you. So With this, I'm summing up my webinar today, but asking hers to take it forward. And before he start question answer session, maja aaya? Did you like it? You got the real taste. If you have got good taste, that is, that's what I always look at from my participants, that they must feel like, yes, we got it. It was very good and we got so many new input. So thank you very much once again. Wishing each one of you a great closure of financial year 23-24. So wish you all the best for the new financial year coming 24-25 with a lot of capital, health, wealth, happiness, joy, and everything. But before I forget, 24th of April, you can block in your diary. 24th of April, 24 at Gurgaon. We are doing a coffee with Bimal Jain. Do you want to meet me personally? Do you want to discuss GST queries 101 with Bimal Jain? Do you want to interact on any aspect of GST or otherwise? We are meeting on 24th April. Stay tuned on Zoho Books and on my social media. You will get the details venue where we are doing this particular program, and look forward. In case you are in nearby NCR area or even away from NCR area, look forward. You can come forward and we can meet together. Handing over to hers to take it forward now.
Thank you, first of all, sir. Your excitement and exuberance is a sight to behold as usual. And as sir said, we are bringing sir to you, and sir is taking out his time 6 p.m. onwards on 24th of April. And even though sir said it's on GST, but I'll say GST is just 50% of it, as what we have experienced. The topic ranges from religion, his beliefs, our beliefs, anything, marriage problems also. So I apologize if you feel that it's kind of informal, but that's what we try to do, because 6 p.m. onwards, people want to relax, have a normal casual chat over GST and sumptuous dinner. With this, I would like to thank Bimal sir again with the important year-end discussion that he has had. And we will attend to all your questions in 5-7 minutes. But before that, I had run a poll that who will be interested in Zoho Finance Partner Program. And for that, we have with us Jayant from Partner Team, who would be taking you on just a short journey of how you can be become a partner with us. So Jayant, over to you.
Thank you so much for the introduction, Harsh. Good evening, Bimal ji. So nice to meet you
Good
virtually.
evening.
Good evening, everyone. So thank you all for being patiently listening to Bimal ji. So just a quick introduction. My name is Jayant, and I've been with Zoho for 5 years. I oversee the partnership program for Zoho Finance. So what is this partnership all about? So it's more like a reselling partnership program where you'll get to leverage your expertise, and you can help your customers make a better business decision. So with this finance partnership program, you will be given exclusive access to the finance suite. So under the finance domain, we have multiple application, right from bookkeeping to invoice management, order management, commerce management, payroll management. So you'll get to manage end-to-end finance with the help of Zoho Finance Suite. And for customers that you onboard to Zoho, you'll be getting various benefits out of it, like revenue sharing, other non-monetary benefits like complimentary licenses. I'm sure most of you have heard of Zoho One, which is a one-stop solution, and it includes multiple domain-specific applications. So as a consulting partner of Zoho, you will be given exclusive access to the entire Zoho One ecosystem. So this way, you will get to have an hands-on experience across multiple Zoho applications in different domains. So you'll get to implement Zoho for your own company, where you can streamline the entire business operations, and thereby you can also refer clients to Zoho. And on top of this, you will be given exclusive access to the partner portal, where you'll get to manage all your customers in one single roof. And there are other benefits as well. So you will be working more closely with a partner relationship manager, with whom you can discuss go-to market strategies, and you can also do joint workshops, events together. And coming back to the most important benefits, so we have this website enlistment, where we can add your company's details on the web page of Zoho as a reseller. So with this enlistment, you'll basically be able to increase your company's brand visibility online. So any business owner who wants to work with a Zoho Books reseller can get in touch with you with the help of this enlistment. Of course, there are other benefits as well. So this is pretty much how this partnership program works in a nutshell. So if you have any questions, I'll be more than happy to answer them. So I can take a few questions on chat, but if you want to know more about the partnership benefits and prerequisites, so to become a partner, we have some criteria. So I can send you the details over an email. So whoever is interested, please do leave a thumbs up or drop a message in the chat box so that we can get in touch with you. Give a minute or two so you can drop your messages. Okay. So yeah, I guess I'll be getting back to you via email. So I'm just handing over the session to Harsh. Thank you, Harsh.
Thanks a lot, Jayant. And also, so here we are back with question and answer session. So, sir, first question for the day by Tejas. Road, uh, road tip script sales, exempted sales. Can I liable for reverse common ITC? If no, please suggest which section or rules help us.
They just say yes, road trip script sales are exempted sales, but to my mind, reversal is not required. But it is creating a complication. What happened? Just assume that in a particular month you're not having any ITC, and that month you're selling road tip script, or maybe in a month when you're having a huge amount of credit, what is the repercussion? So to that extent, this matter is under debate and litigation. No clarity is emerging out and no clarity is coming out. So this is a particular litigative point. No straightforward answer to it, but yes, exempted means exempted, but still there are certain exclusion which you can go back to rule and check. Rule 45 or 44. At the moment, I'm not recalling, disclaimer with caveat. You can go back and cross-check. That is my answer, Tejas.
Right?
Next.
Yeah.
Tejas, is it okay? Can I question answers tab? Tejas, are you there? Hope so that I can see that yes, you got it clearly. If you can say okay, then I feel like that you got it. Are you still there in the audience or you left? Tejas?
Yes, sir. Yeah,
okay. Thank you.
Clear.
Thank you. Thank you.
So the next question is by Diksha. So what if threshold limit for generation of e-invoice crosses during the financial year?
From that date, Diksha, in between, because 5 crore threshold is made in between 1st August 23. So what you have to look at, aggregate turnover crossing 5 crore in any preceding financial year. So for understanding sake, let's say 22-23, until 22-23, it was less than 5 crore. Let's assume. It only crosses 5 crore in a period April 23 to August 23. Whether generation of e-invoicing is required, my answer is no. It will be applicable only from 24-25 onwards. That is my answer, Diksha. Hope I'm clear. Diksha, can I see yes in question answers tab that it is clear to you? Diksha, quickly, because there are so many in a pipeline now. So I need your yes and no quickly.
I think we got a thumbs up from Diksha.
I don't know, but she's not writing. Okay. Anjali is saying yes. Who is Diksha? I do not know at the moment. But nevertheless, if my answer is clear to my audience, can I see thumbs up from all? If my answer is clear to all, can you raise your thumbs up so that at least clarity? Okay. Next.
All right. So I'm just asking a few questions from question and answer tab also. So I got a question from Indrajit. It's a humble
You
request
first,
from him.
no. Has finish it off from
Okay,
chat
okay,
box so that
fine, fine.
even I'm also watching your chat
Oh,
only.
okay. All right, sir. By Saurabh. Sir, could you please emphasize the difference between cross charge versus input service distributor once again, please?
Or a very clear cross charge when there is element of service and there is internally generated services. What is internally generated? Your CEO, CFO, common HR, IT accounts team sitting at head office, and they are looking after operation of your branches also. Are they really providing any service? Is it deemed supply? In terms of entry to schedule 1, answer is yes. This is called cross charge because ultimately your CEO, CFO, common HR, IT accounts team is also looking after the operation of branches. Deemed supply. This is called cross charge. What is ISD? Input service distributor is a different concept altogether. It was prevalent under a service tax regime also, where HO is procuring certain common input services and paying GST, and these common input services are being used all different distinct person under same PAN number. So what happened? HO is paying total payment to the supplier, which is third party service provider, and it is outside services, outside common input services. Whether HO can claim full credit? No, it is not being used by them. It is used by so many other distinct person under same PAN number. So here the concept ISD will come. HO will take ISD registration and will distribute the credit to other distinct person in the ratio of their utilization. And this is now clarified by 52 second GST Council meeting and with the recent changes in Finance Bill 24. Now they are saying that ISD need to be separate and separately registered. You can't follow cross-charge mechanisms which you were following in the past for ISD mechanism. That cannot be. This is what being clarified. So cross-charge versus ISD, broader difference. Hope I'm clear, Saurabh. Saurabh, can you say in question answers tab, you are clear so that I get clarity that it is clear to Saurabh? Quick and faster, Saurabh. Okay, he's not coming back. So move us. Maybe he has
Okay.
left, putting a question and gone.
By next question is by Prasad. Expenses reimbursement from client at actual pure agent. Please comment whether part of output supply.
See, pure agent, if it is, see, try to understand pure agent concept now at most be applicable for the taxes. Otherwise, you cannot. I'm a chartered accountant. Let's assume I'm going for my client to appear in a case in Bombay Tribunal, and he's reimbursing me to and fro hotel charges. When you go to pure agent concept rule 33, they are saying that I should not use those services for the provision of my services. Is it possible without taking these services, whether I could have given the services to you? No way possible. So I am supposed to use these services for the provision of my services. Then it will not be pure agent. So pure agent at most now are restricted to the taxes component. Otherwise, pure agent is only for the namesake. That is what my humble submission. Prasad, am I clear? Prasad, are you there? Or
yes, sir. Okay.
Prasad.
By
Okay.
Prasad.
Okay.
Yes.
Okay.
One another question. I don't know if it's by the same person. By Prakash, e-invoice related. I have 30 invoices in a month. E-invoices generated only for 15 invoice out of 30. What is the implication in GST?
Simple. For balance 15, you are non-compliant, and your buyer for 15 invoices for which you have not generated e-invoice, they will not get the credit. Implication. So Prakash, am I clear? Can you say yes in question answers tab? Prakash. Okay. So again, no problem. Next.
All right, sir. We by Viraj, we have two separate state GST registration and also outward supply from both state and some service like audit fees bill issued to one GST. Do we need to register under ISD or can issued cross charge invoice?
Now it is ISD because finance bill related changes clause 11 to clause 13. Kindly pay attention, but it would be prospectively applicable. So agent when notified, ISD would be compulsory. It's a concept of ISD. It is not internally generated services. It's a third party services. But till the time it gets notified, you can follow the cross charge. Viraj. Viraj, am I clear? Are you there in the audience? Viraj? I don't know whether they are there in the audience or not, but still I'm calling their name and wanted them to say something, yes or no. Nothing is coming out in the question answer tab, so maybe again.
All
Okay.
right. Yeah. Indrajit
Next.
sir, we will ask your question to sir. Just give us 1-2 minutes. Stay with us. Another question by Webhub. What if an advocate providing services related to accounting and taxation? Then does this service come under RCM?
See, accounting and taxation are something different. It is for legal services, advocate. So please try to appreciate it's not the status of individual, it's the services which is subject to RCM. So to my mind, it is different from the factual position. Next.
Right? Should we, by Swapnil, should we reverse RCM ITC also as per Rule 42? Further, ineligible ITCs reverse 100%, still Rule 42 made applicable for ineligible ITC or ITC reflected in GSTR 2B, which does not belongs to taxpayer.
If it is ineligible and we are not claiming any credit, then it's not the part of common bucket. Swapnil. Common input tax credit is only subject to pro rata reversal. If ineligible is being taken out because it is not available, how come then Rule 42 will come into the picture? Hope I'm clear, Swapnil. Swapnil, are you there? Some of the guys I know because they always keep interact with me. Okay, so he said thanks, so he's there.
All right.
Thank you. Okay.
Arnav, hello sir. Does the provision of payment within 180 days to the vendor for claiming input tax credit applies to import of goods as well?
No, it's not applicable, Arnav. Arnav, are you there? Let me check Arnav is there or not. I've given the answer, but it is not applicable. Arnav? So I don't know. So Arnav is there. Okay, thank you. Next.
Thank you, Arnav. Next question by Ms. Sangeeta. Sir, if the construction of the plant and machinery is washed away by flood and ITC has been claimed, what should we do?
Oh, 17.5H. Very, very difficult question. It's a litigative point also. But again, we can always debate and litigate. So no straightforward answer. Depending on the factual, it can be defended also. Sangeeta. Sangeeta, are you there?
Yes.
Okay, thank you.
By Priyanka. What to be done if proceed of export of service does not come and shown as bad debt in book at year end, whether in GSTR 1 such invoice with LUT to be shown as with payment and GST to be paid with interest?
See, this is what pertaining to goods. Now, Rule 96B notified from 1st October 23. Prior to that, for goods, it is not going to have any problem, but you are asking, Priyanka, for services. For services, now here, if you have taken the refund for which you have not received the money in convertible foreign exchange, then those refunds need to be returned back along with interest. And that is what the provision all about. Priyanka?
Yes, she has replied.
Next.
Thank you, Priyanka. One more question from Priyanka. Whether payment to GoDaddy for web posting shall be import of service and accordingly RCM shall be applicable?
Import of services, 3 conditions we look at normally. The first condition, location of supplier outside India, location of recipient in India, and place of supply must be in India. And these digital services are driven from a perspective that location of supplier. To my mind, we can always debate RCM not applicable. Priyanka? Priyanka, just a minute, just a minute. No, I will not. I'm not concluding, Priyanka, here. Import of services once again. Supplier outside India, location of recipient is in India, and place of supply for digital services is location of recipient. It's location of recipient. If that is the case, then of course RCM applicable from import of services perspective. So that is what would be my answer. I have revised the answer which I gave it to you, Priyanka. Can I see yes in question answers tab? Okay, next.
All right. So, Mr. Indrajit, thank you for waiting with us. So, sir, his question is, Section 7512 can override Section 73 and 74?
Where his question is, by the way?
Sir, I've resent you on the chat, personal chat.
Personal chat, Indrajit, right?
Yes, sir, my humble request is starting with that. Yeah.
Just a minute, I'm just checking it. Okay, Indrajit, sir, my humble request to you, please answer. 17.5.12 can override. They are saying so, Indrajit. They are saying notwithstanding anything contained in 73-74. And that is what they are talking about. But of course, we can litigate and defend, Indrajit. If you go to 75 subsection 12 explanation, they are overriding. But we can always defend. Just section with no justification can always be litigated. That is my answer. So Indrajit, otherwise provision says so. Indrajit, am I clear? Okay,
Thank you.
next.
Thanks a lot, Indrajit, sir. Question by Kishore. Sir, in e-invoice, we must issue all invoice before 31st March 24. For this fiscal year, what is time limit for issue credit note in case of service supplier? Is e-invoice of debit note possible?
See, there is no concept of debit note. Wherever supplier is giving any kind of discount or incentive, it is always credit note under GST regime. And credit note for any financial year can be issued till 30th November, but effectively October 24. That is what going to be applicable. Kishore, am I clear? Kishore, can I see yes in question answers tab? Kishore? Sir, e-invoice, we must issue all invoices before 31st March. Yes, sir. That question I've seen. See, but otherwise also, Kishore, try to understand. This debit note, credit note. Debit note is raised by the supplier only when there is incremental liability he want to charge from the buyer. And credit note whenever he's giving any incentive and discount. And that is quite doable. Any debit note, credit note pertaining to any supply made in 23-24 as per section 34 can be done till 30th November, which is October 24 effectively, as I discussed today. So to my mind, it is not like 31st March 24. It can be in a period April to October 24 as well. Hope I'm clear now, Kishore. Kishore, can you say yes and possible from my side? It would be dated in the period April to October 24. All right, next.
So this question is by Mr. Himanshu. He has been a regular attendee of our webinars. So how to determine open market value in case of cross charge? It would be more or less.
Very difficult, Himanshu. Cross charge for services, very difficult task. Then you need to follow where recipient is entitled for full ITC. Then any value can be picked up by supplier that shall be deemed as an open market value. Himanshu. When it is when you are into exempted sector, then of course total cost or 110% of total cost. That is the criteria excluding the salary component. Am I clear, Himanshu? Himanshu, are you there? If not, move. Okay.
All right, sir. By Muskan, while filing GSTR6, can we give details of just those services on which ITC is eligible to the recipient and not allocate the services on which ITC is ineligible?
Need to be both, Muskan. Eligible and ineligible both need to be distributed. That is what the provision says so. Muskan. And with the change of ISD concept, they will notify the rule also. And corresponding rule are going to be amended. To my mind, Rule 39, read with Section 20 of CGST Act. Are you there, Muskan?
Yes, got it. Thank you, sir. She has replied.
Okay.
All right. Next question. So Kishore, sir, same question has been answered. So I'm moving ahead from that. So now the next question is by Mr. Dharmender. Sir, at the very first instance, our client has intimated us to raise the e-invoice on its Delhi GSTN in respect of works contract service executed in various states. Now, client has told us to issue fresh e-invoices on its respective states GSTN. But we amended through GSTR1 by adding the respective GSTN. Will the buyer be able to take ITC based on older invoice read with amendment in GSTR1?
If credit is available, then no challenge. Of course, they can avail the credit. So just because you have done the amendment and it is moving out to respective GST number, amendment is also being made. To my mind, there is no challenge, Dharminder. If credit is available, because works contract, again, 17 subsection 5 clause C need to be looked into, which I'm not discussing. So I'm assuming credit is available, then this amendment will not be a bottleneck. Dharminder, are you there? Okay, next.
All right. So same question by Muskan ma'am, we have answered. So I'm moving ahead. So for GST, this question is by Mr. Kapil. For GST on services, we charge GST for workshops and get together event services. We pay GST on ticketing audit services. Can we claim 100% ITC?
See, credit mechanism on the basis of in the course of furtherance of business. If you can demonstrate it is in the course of furtherance of business, of course, credit is available to you. So that is the only thing which you need to look into, Kapil. Nothing else to my mind. And broadly in the course of furtherance of business, Kapil. Okay, next.
Right. By Mr. Sagar, it's a lengthy question, so please be patient. Finance Act 2013 omitted Section 13(9) and Section 12, subsection 8, and further clarification, CGST Circular 203/2023. Default provision of Section 13(2) will get attracted. In case of freight forwarding and shipping liner paying ocean freight to outside India, foreign party, whether RCM will attract in ocean freight, whether it will be considered as import or service or not.
See, this particular change is being brought, of course, not from 1323. Now, Sagar, again, I will go with the basic fundamental. If your foreign shipping line is outside India, you are the recipient in India, and place of supply as per the provision is location of recipient, then quite obvious reverse charge is going to be applicable. That would be my answer, Sagar.
All right. Fine. So this question is by Mr. Sridharan. Please take my question, sir. Is e-invoice mandatory for SEZ units, Special Economic Zone?
Take my question. Is e-invoicing mandatory for SEZ units? So what they are talking about, e-invoicing is applicable for B2B taxable supply, B2B taxable supply, export, and debit note and credit note. If SEZ primarily not making any B2B taxable supply, it is 100% export, 100% export, for which SEZ is being registered. In one of the questions, FAQ, frequently asked question, they are saying need not required. But to my mind, you have to look at this factual position. If any other supply made by SEZ unit, then of course SEZ, but otherwise it is SEZ is being excluded. SEZ is being excluded. They need not require to be. SEZ unit need not require to be. Next.
Sir, we
So
have, yeah.
just a minute.
Yes.
Sridharan, am I clear? Are you there, Mr. Sridharan? All right. Next. SEZ
Yes.
excluded.
Yeah. So Sagar ji has replied. I'm just asked, should I reiterate? RCM applicability on commercial
No,
property. Yeah.
now we will stop. We will not exceed further.
All right.
Last question.
Last question. So, okay. So, this question is by Soumya. If you pay advance for goods or services that are ineligible ITC in current to the vendor and the goods or services are delivered in the next month, is it necessary to show in the current month or in next month in GST or 3B?
Of course, in the next month, see, by paying advance for services, GST leave. You pay advance for goods and services that are ineligible ITC in current to the vendor. Goods and services are delivered in next month. Is it necessary to show in current month or next month? So, my mind, this credit is not available neither in current month nor in future month. So, of course, it is now auto-populated in this particular month. Even you are supposed to get goods and services, but credit will not be available. To that extent, you can show in a current month. But as a concept of on receipt of goods or services, of course, then you can take it into the subsequent month. Then again, you need to reverse. To my mind, don't complicate. Reverse it in the same current month. That would be my advice, Soumyak. Soumyak, yes, correct. Soumyak, am I right? Because complicating, taking it into the next month, then complicating will create a problem. Ineligible. Soumyak, are you there?
So he has replied, okay, thank you.
Okay, all right.
So are we closing this today or we can take?
Maybe last and then close.
All right, so I'll just take one very lengthy question. Maybe it's important. I'm just copying it to you, sir. It is by N. Sai Kiran Reddy. All right. So I am Sai Kiran Reddy from Indoors Trade Fair Services Private Limited. We recently received a notice for the 1617 FY regarding GST payment. We had paid the GST amount to the vendor, who unfortunately did not provide us with the necessary input. Now, after 5 years, the GST department is demanding payment with penalties and services. Regrettably, we discovered the notices in our junk email folder, and by the time we checked, the deadline had passed.
No option other than writ petition now, Mr. Sai Kiran. And looking at the factual position, you need to defend yourself. So you have to create a factual background to substantiate why we could not reply on time and why we are a genuine taxpayer and we should not be demanded this liability. That would be my answer to you. Sai Kiran?
Thank you very much, sir.
Okay. Thank you. Thank you very much.
So
yeah. I think time is a pause, and that is how my request to all the participants would be. They are for last 2 hours with me. Thank you very much, and thanks for your time, each one of you. Thanking Zoho Books to take this lead, making GST good and simple tax. Let's continue to have this long-term partnership, which all the participants look forward on 24th April. Of course, starting in the evening, followed by dinner. And meeting with 101 with you would be my delight as well. So 24th April at Gurugram, basically. So details. Which one you said, Has?
So it's at Doubletree Hilton, Bani Square. So
Okay.
we would be hosting you all for a dinner. It's completely free invite because we want nothing to come in between you and Bimal sir. So please gather around. We'll be happy to host you, and Bimal sir will be more than happy to answer all your questions. Initially, we set it for 45 minutes, but trust me, it goes on for 3 hours and more. So that's how exciting it is.
Okay. Thank you very much to each one of you. Take care.
Thank you very much.
All the best.
The webinar has ended. Thank you for joining. Goodbye.